Ladies and gentlemen, welcome back to the channel. Here in this video, we will be discussing Tesla stock, what Wall Street is saying about Elon Musk's new compensation package, and what could be coming next for the stock. Now, we will also discuss the lineup of earnings over the next 24 to 48 hours or so, because I think that's going to be big. There's some companies that could be important-ish for Tesla, like Rivian, like Lucid, okay, that are going to report earnings here in the relative near-term future. I have a clip from CNBC I want to share with you where they're actually discussing the compensation package, which I think is a much bigger deal than how the stock is actually reacting today. And just briefly on this, the stock is up over 2% today. That's great. But I really think this news is much bigger than most people think, because yes, we're going to keep Elon at the CEO position in Tesla for another 2 years. But it's really the long-term strategic compensation package that was confirmed we're going to vote on November 6th. That is the big deal. The confirmation of that is a big deal. And I think it's something over the next couple of months we'll start to really pay attention to, especially if we do get some kind of insight to what this comp package could look like. Okay, and we'll have plenty of time to discuss that more in depth in the coming days, weeks, and months. I do also have another clip from Tom Lee that says stocks are going to hit new all-time highs in August. So two huge clips I want to share with you as well in this video. First and foremost, hit that like button and subscribe to the channel if you have not done so already. Secondly, check out that link down below in the description of this video for the trading community if you have not joined that already. Guys, what we're doing over there is going out, finding small cap AI winners, right? Before Wall Street picks up on them. I've done this personally in different sectors and areas of this market for a long time, whether it's, again, 2017, 2018 was cannabis, right? 2019 was small caps and biopharmas. 2021 was COVID, okay? Most recently, it's been semiconductors, and now it's broader-based AI, like data centers and energy related to AI. I think a big area Wall Street is underappreciating is the appliers of that AI technology. Not exactly the buyers of the GPUs, but what are the companies actually going to sell to customers? How, that's a big area that I think is not really being looked at right now. And one company specifically I have now put over $75,000 into. I think that is a 10, 20, 30x opportunity, maybe as much as 50x opportunity. I know it's pretty wild, the kind of stocks that are out there that are undiscovered. Check it out, link down below in the description of this video. But on to tonight's episode. So first and foremost, Dan Ives says that Musk's new pay deal lifts uncertainty for Tesla. It says here, Tesla's new stock award for CEO Elon Musk removes a key overhang and ensures leadership stability through 2030, says Wedbush analyst Dan Ives. In a note following Tesla's 8K filing, Wedbush called the 96 million share grant a strategic move to retain Musk, aligning with its earlier call for the board to secure his long-term commitment. The award, valued at $23.7 billion, mirrors terms from Musk's 2018 plan and requires him to pay $23.34 per share upon vesting. Wedbush emphasized the importance of Musk amid the AI talent war and reiterated an outperform rating with a $500 price target today. Again, this is great, but the big news is really, what's that new compensation package going to look like November 6th? What are the tiers to that going to be? As I've talked about in many videos now, like setting a goal makes that goal more achievable, right? If you're just someone out there living life, like working day by day, like, okay, eventually you might be like a millionaire because you bought a house or, something like that. But if you're not actively trying to become wealthy, you're never going to become wealthy. Okay. You're not going to stumble across it. Okay. Although, if you live your life in a way that does, to some degree, prioritize wealth, security, and stability, you will inevitably get very wealthy, right? Just that alone can make the difference between tens of millions of dollars in lifetime earnings, okay? Same is true if you set a goal for anything else, like being a doctor, right? If you set a goal to become a doctor, you're more likely to become a doctor than never setting that goal to begin with. You're not going to become a doctor, right? You're not going to stumble across it. Same goes for something like this with a compensation plan. If Tesla puts in a 2 trillion, a 3 trillion, a 5 trillion, 7, 10 trillion, 12 trillion, 15 trillion, 20 trillion, 25, 30 trillion dollar tiers for Elon to strive for, the odds that we can actually achieve those kind of valuations over time becomes instinctively a little bit more likely. And I think with Tesla less than $1 trillion valuation, even to get a $2 trillion valuation, Wall Street would be more than happy with in the next couple of years, right? If the S&P does 11% on average, 10% on average, dividends reinvested, of course, every year, you're talking a double up in 2-3 years. That's triple the S&P 500's return. Like, Wall Street is cool with that. They are happy with that. Let alone you're starting to talk 3 trillion or 5 trillion or 10 trillion, hell, $30 trillion, a 30x. Like, Wall Street doesn't even have that on their radar, right? And I think that's the big news out of today. We did not know if we were actually going to vote on a compensation package for Elon on November 6th. Now, I assume that we're going to get the comp package unveiled at some point in the next couple of months. And when that happens, I think that could actually be the big catalyst, because let's face it, everyone's going to vote for the compensation package. Like, if you don't vote for Elon's new comp package, there's something seriously wrong with your mental stability, okay? Hedge funds and institutions alike. Like, there should be 100% yes votes for Elon's comp package. That's simple. He makes money as you make money. It's literally as simple as that. Now, we haven't gotten too many other notes out from analysts just yet. But we do have this news that Tesla is slightly increasing Model Y production output at Giga Texas. This is likely in part to prepare for the rush of demand they'll see in the US at the end of the quarter before the EV credit expires. So that's also exciting. Now, in the news tomorrow, you will get the balance of trade for June, exports and imports for June. This will feed into a new GDP update from the Atlanta Fed GDP Now tracker that's currently at 2.1%, with the latest estimate that was on August 1st. Okay. The range of the top 10 and bottom 10 average forecast have GDP at like 0.8%, 0.8 to 0.9% for Q3. So let's just again make sure. So some of these numbers will move. The estimates for this, you can see the next GDP Now update is Tuesday, August 5th. Okay, so that is tomorrow. That can be important, but as long as it's not a huge move, it's like up or down, the deficit's a lot larger or smaller than expected, it's not going to move the numbers all too much. We do get final numbers for S&P Global Services PMIs that will be coming out. PMIs stand for Purchasing Managers Index. Okay, so it's basically a survey. It's soft data. It's not hard data, but Wall Street pays very close attention to it, okay, because it's expectations from senior executives in the services or manufacturing, industry. There's services PMIs and manufacturing PMIs, okay, if you didn't know that. Tomorrow's data, we're going to get services PMIs for July. You're expecting the headline number to come in at 51.5. That's up from last month's 50.8. Business activity expected to rise to 54.3 from 54.2 last month. Employment expected to rise from 47.2 to 48. New orders expected to rise from 51.3 to 51.4. And prices paid are expected to rise as well from 67.5 to 67.7. Arguably, the prices component is the most important and what Wall Street will be paying most attention to. Now, you will get the RCM TIPP Economic Optimism Index as well, expecting this to rise from 48.6 to 49.2. So keep that in mind. That, just to add to it, could be important. Now, we do know later in the week, not really Wednesday, we don't have much. Thursday, smaller data sets, but a bunch of Fed speakers, initial jobless claims as well on Thursday. Friday, not much economic data either. So the ISM services PMIs tomorrow morning are actually going to be, the biggest data set, if you will, of this week, as long as initial jobless claims don't spike or do something crazy. You are going to get some earnings tomorrow morning from Pfizer, Caterpillar, BP, Duke Energy, Lemonade, DuPont, Vertical, and Marriott, as well as Eaton. And then Tuesday, you're going to get in after hours tomorrow. AMD, Supermicro, Arista, Astrolabs, Opendoor, Snap, Lucid, Upstart, Rivian, and Clover. Again, could Lucid and Rivian be important for Tesla? Probably not. They could be something to keep on your radar. Uber, Shopify, Disney, Six Flags, Dave, and McDonald's report Wednesday morning. AppLovin, IONQ, Symbotic, Duolingo, Fortinet, Elf, DraftKings, Jack in the Box, and Joby, as well as Energy Transfer report Wednesday and after hours. Thursday pre-market. D-Wave, quantum computing stocks. Celsius, Eli Lilly, ConocoPhillips, HUD 8, Vistra Energy, and Sony report Thursday morning. Thursday and after hours. The Trade Desk, Rocket Lab, SoundHound, NewScale, Block, Pinterest, Atlassian, Take-Two, and Twilio. And then Friday pre-market, Fubo, Tempest, Wendy's, and some others. Now with that said, let's get into this first clip here from Tom Lee and why he thinks stocks are going to hit a new all-time high in August. Keep in mind, this is kind of a contrarian call, given we just had this shot of fear on Friday. Yes, markets rebound quite a bit, but August is seasonally a weak month for stocks. So it's kind of out of consensus. Tom Lee saying this to begin with.
Joining us now to talk markets and more is Tom Lee, head of research at Fundstrat, chief investment officer of Fundstrat Capital. He's also the chairman of BitMine as well as a CNBC contributor. We've got some new stuff to factor into your either bearish or bullish case. I assume it's still somewhat bullish, but okay, the economy looks like it may actually be slowing a little bit. Last week, the markets definitely retrenched. You've been solidly bullish since, Liberation Day. But last week was a setback, and August is not always a great month. You think we get a little bit of choppiness here? Are you still bullish?
Well, last week was definitely consolidation because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup because now the Fed has more ammunition to make a dovish pivot in the fall. And it's not too late because we know the thing that they're going to stimulate is the housing market. And you had a couple guests earlier talking about that. And so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating and then we make a bigger move higher.
Is it fair to say that since it's a dual mandate, that maybe the Fed should have been able to think that there was more risk to a slowdown than to inflation? Do you think they missed that a little bit and they're fighting? I don't know, but Trump said you got to cut, so they couldn't. Maybe they had to err that way just for political reasons.
Yeah, I think the Fed needs to demonstrate independence, but you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
Right, but you have also been, I guess dovish is the word, on inflation. You have not thought that there was going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff driven, it's been only mild. But also, if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now and what time frame?
I think we're going to rally pretty strongly in August. So I think we can get back to 65 or get to 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
BitMine, we mentioned that at the top, is going to be, in your view, the micro strategy or strategy of Ethereum or Ether.
Yes, that's right. Just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder, then.
Yeah, the largest ETH treasury in the world and the third largest crypto treasury in the world. And we also announced that Bill Miller III made a major investment last week into Bitmine. So he joins Kathy Woods in investing in our company in the past couple weeks.
That's the Bill Miller from Legg Mason we all know.
Yes,
right.
that's right. The Bill Miller that we all know.
Yep.
Yes.
He was super early.
Yeah.
On crypto too.
No, that's what I was going. I was saying super. He was like, right? What was he getting Bitcoin at? 2012, 13?
Yeah, he has some of the lowest cost Bitcoin out there.
What's your symbol? What is Bitmine?
It's ticker BMNR. And the stock now is around 32. So in the past $4.50, yeah.
Now, I think it's also important to listen to what Wall Street is saying about this compensation package as well, because that'll further give us a little bit more insight to, like, is Wall Street picking up on just how positive this news actually is in regards to November 6th? I don't think so. Let's see if you agree with that. Take a listen.
Okay, we've got some breaking news just for you right now from Tesla. You'll remember back in 2018, Tesla had put together a compensation package for Elon Musk that was struck down by a judge now twice, despite shareholders voting twice in favor of that deal. Well, the board has approved a new deal, a bit of a what they're describing as a make-good deal. They've approved a plan to pay him 96 million shares temporarily as this case and their appeal continues. Now, 96 million shares is the equivalent of about $30 billion. This would be a $30 billion make-good. It represents about 3% of the entire company's shares as part of the original transaction or compensation deal that was agreed upon back in 2018. He would have received, given the milestones that he surpassed, the equivalent of close to $90 billion or 9% of the company. And you'll recall that we talked about how at the time the package seemed almost impossible to achieve. He did achieve it. The shareholders voted on it twice, but a judge has disagreed with that. This plan would be, quote unquote, prospective rather than retrospective. You're not effectively allowed to pay for previous work. As part of this deal, he would be paid and those shares would vest over a 2-year term. As part of that, he would not be allowed to sell the shares, however, for another 5 years. So even though he'd be paid those shares today, he can't sell those shares for the next 5 years. He can pledge those shares so that he can effectively take out loans to pay for the taxes on the vesting of those shares. So it actually mirrors very similarly the way the original 2018 plan was set up. And if you remember, he has not been paid $1 since the 2017 plan effectively ended. I remember talking to both of you that morning in Davos when I ultimately broke that story, that to me this was the most shareholder-friendly plan that exists. You either get paid or you don't, and it's a true pay for performance. They are saying, though, this is just a down payment, and if in fact the court were to approve the appeal, meaning if they were to win on appeal on the original deal, which is still in flux, this deal would go away. So effectively, there would not be a double dip in terms of how the transaction would take place. And I would also just point you to a sentence that I do think is interesting, because clearly they're starting to think not just about paying him a third, which is this $30 billion deal, but they're trying to think about what the future holds in terms of what comes next. And there's an allusion to the fact that they are reading everybody's tweets and X's. These are shareholder tweets and X's, and how they're thinking about all of these things, and also what they say is important to Elon in terms of trying to focus his energies. I think there's going to be a lot of people reading that sentence saying, well, what is it that they can do to align? They're saying that they want to keep Elon focused, and it's a first step towards achieving that goal. You might say, well, what's the next step? And they say that they are working on next steps to address that issue. There's been a lot of speculation. We've talked about it on the air before about whether potentially a Tesla could make an investment, for an example, in an XAI as another way to potentially, focus his energies. He's talked a lot about AI being the future both of Tesla, but of course he owns XAI. XAI now is actually a service that lives to some degree inside of Tesla because they have some of those features now available on the cars. It wouldn't surprise me if that's what that sentence ultimately means. We're going to see how all this plays out in November.
What's
of course.
Sentence, Andrew?
There's a sentence towards the end about trying to refocus his energies and what they're going to do to work to address the sort of next steps of all of this, and so what the next steps could ultimately be. That's all for now. We're going to have to read through the rest of this, but it's fascinating. $30 billion. By the way, it would have been a lot cheaper to allow the original plan from an accounting perspective to take place. I know money's fungible, but if you think about how it was accounted for back in 2018 and how you now have to account for it today, meaning it would actually cost you $30 billion if you did it.
We waited for the first $1 trillion company. I'm still waiting for the first $1 trillion individual, and people are saying it could come as easily as 2027, could as early as 2027. We know who it would be, most likely. Probably not going to be anyone here at this table, but I guess this factors into that possibility.
Well, this is only $30 billion.
I know.
It takes a long time to get to.
But if he gets that, and then the stock obviously has to do well.
He's got to pay
$23.34
a share for it.
Right.
It's not given away for free. That was the price that it was under the original.
I don't know how they
exercise price in 2000.
But even before this news, they said it could be by 2027. There'd have to be some outsized gains in a lot of his companies, I would think. Then you'd have $1,000 billion.
It's hard to comprehend.
So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. Come try it out. We would love to have you there. Over 100 members strong at this point. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.